The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman. If the Dow holds under 38,440 for 60 to 90 minutes, there's a chance it'll retest Friday's low. That's the candle implication from Friday of the Dow. All right, let's get to the numbers. On this Monday, the 17th of June, the Dow is down 117 at 30,470. You can see the 9-period exponential moving average deflected lower. Price keeps coming down. The MACD is weak. The relative strength, the gray line right there. Let me just get the other pointer. Maybe that's easier. So there it is. Daily chart. Relative strength is very weak. Stochastic is rallying to 47%, but it's really not showing strength. And look at the divergence between the rally attempt and the actual price movement here of the stochastic. And the on-balance volume is really very, very weak. So what we're looking at here is the sell signal in the Dow continues from that 20th of May high of 40,077. The rectangle formation in the weekly chart just says, just a digestive phase. Don't get too excited. But, day after day of selling like this, and yet look at the weekly chart and look at the monthly chart. Leg Dean still holding very well. What have we got? 2 weeks to go for the end of the month. All right, we're watching that. Let's look at the S&P. The S&P is only down 3 at 54.28. Every bit of selling gets eliminated because the buying pressure is just really strong. You've got the price here in the daily chart. The price is way over. For 4 sessions, we've had this very narrow range between about 54.18 and 54.47, the all-time high, 54.47.25. However, it's 4 days of sideways digestive action. I have to be impressed. The 9-period moving average, the price is over the 9. The 9 is over the 14. The MACD is strong. The relative strength index is doing very nicely. The stochastic's at 93%. On-balance volume is just pulling back a little bit with a little bit of price movement. Isn't that interesting? But it's the weekly charts that are really quite impressive. So I'm going to go through a couple of things now. I discussed it Thursday and Friday, discussed it in great detail. On Friday, I did 2 shows. I did Tommy's show at 9 o'clock, and then I did my show at 10. And I'm going to continue that theme. Why? Because this is so important. Look, when you get the 9-period moving average just refusing to budge. Here's the SMHs. Even though it was down a little bit from the high today, it's still up 82 cents. When you get the Dow concertedly underneath the pink 9-period moving average, but the price hasn't really pushed sharply away from that negative 914. So that's okay. But in IWM, the Russell 2000, here the price has dropped quite sharply away from that pink 9-period moving average, meaning negative 914. And the QQQ is still way up here at 479.62, up 43 cents. So the question is, what would it take for the entire market, not just a couple of sectors, to be weak? What would it take for the overall market to really, I wouldn't say collapse, but at least to have an 8 to a 10 or 12% correction? I mean, that should happen every 4 or 5 months, right? Well, nothing yet. And yet at the same time, look, you've got I was just about to go to look at this. Here's the SLX. This is the steel sector. Breaking down after that rectangle move up to the 75 round number high. And that was back in December, and now it's trading at 64. Well, that's 11 points. There you've got yourself 18 to 20% correction so far. But that's really important. And look at the IYT, the Russell 2000. Now pulling back sharply from the high. made a whole series of highs up in the 70 to 71 area over a period of since May of 2021. That's over 3 years ago. As in that interim period, gone to 48.18, October of 2022. And now it's making lower lows and lower highs. These are normally, these are key sectors. PAVE, P-A-V-E, this is the infrastructure. All that, the billions of dollars have been going to infrastructure. And here it is, not making new highs off the 39 all-time high. And it's down to 37. It's just not a big deal. But look at the dreaded H pattern in the weekly chart. So I'm looking at this and I'm suggesting that we are looking at two scenarios, and both of them at this particular point are suggesting initially somewhat benign pullback, but then you have to be careful. Now, let me explain what I'm looking at. If the Dow has already done a major part of its correction, all right, using the sideways time, in other words, more time than price. If the IWM, the Russell 2000, that's the small caps, has taken all this time and yet is still only in the weekly chart in a sideways consolidation, what would happen if there is some kind of a minor pullback in the SMH, that's the semiconductors, the XLK, that's the S&P Select Spider Fund. I've been talking about that for some time now, saying that it's at all-time highs. It was lagging just a little bit, and then it really caught up. But this is just saying that what if I am the S&P Select Tech Spider Fund, the XLK. I'm about to have a huge consolidation. Well, a huge consolidation just takes you back to less than a month ago. Look, it's 228. If it goes back to 208, or what is that? 205.53 was the low before the big takeoff. That was the week of, that was right on the 31st of May. Well, you would expect that if there was a sharp pullback, you'd get that candle and the previous candle to be taken out. But then you've got a ton of support. So here's my scenario. There's a chance that we have rotated through corrective modes in certain areas, that the NVDA, now this is going to be, oh man, if NVIDIA is not about to correct, but is about to have, dare I say it? No, I can't. No, I will. Another huge move to the upside. That would say that it could drag the other indices higher, right? When you look at the chart and you see the stochastic for this amount of time above 90% or in the high 80s to 90% area, invariably when you've used up, I've tried to find a hard and fast rule, but all I can say is let's call it 6 to 8 weeks of sideways consolidation. Invariably, once the stochastic starts to slide under 80% after that kind of a mood, the previous high is a high for at least an intermediate term, but I'm only talking about daily intermediate term. I'm not talking about weekly. So you can see what I'm looking at here. I'm looking at a situation that says, in the wrong sector, forget it. In the right sector, forget it. You just have to hold. I'll be back in a moment. Intriguing, huh? What about bonds?
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So on my list here that I have just what I call my streamer list. These things show up. These are mid-cap 2,000 stocks under $10. Suddenly something pops up, TNGX. So I thought, okay, I'll have a look at it. I don't think I've seen that before. And then I look and it's called Tango Therapeutics. And I do remember, I don't forget anything that's a tango. I love tango. So Tango Therapeutics, I have no idea what it does because I just had to quickly do the notation. Monthly chart made a peak A. It goes all the way from the 2s up to the 13s, stops dead. But if you look at the weekly chart, that peak D at 13.03 back in early October dropped very sharply to 5. I would say that's typical biotech. And then it goes peak A, peak B. And then underneath the previous D, it makes a C, and it goes 13.01, 2 cents lower. And then it comes all the way back down. Now it hits the 6s, and boom, all of a sudden it goes from 650 to today's high. And 650 was end of May. And here it is at 9.32. It's almost a 50% gain. Up today, 4.37% at 0.39.932. So I didn't want you to bring this up to say the patterns that I look at all the time get repeated. Even these crazy biotechs, you just look at the chart and you say, oh, yeah, that looks like a biotech. They always have this long wick to the upside and bodies down at the bottom. And they just keep doing that, wicks at the bottom. And years ago, I discovered, well, I wasn't 100% sure, but my theory was from the analysis I did, that in the biotech, especially in the micro biotech area, micro meaning only because they haven't raised enough money and all that stuff, to pay their people, very often they pay them. You can actually see it. It's almost like on a monthly option scale where the options close out the month, and just before that you get a big spike, and then it comes down. Everybody gets paid, and then they start all over again. I'm not sure if exactly that's the way it works, but it looks like that's the way it works. But I did want to show you, my rule of thumb with the large rectangle. So yeah, it goes from 1303. That was 1303. That was the first week of October, I think. Yeah, the week of the 6th of October. And then this is Tango Therapeutics, TNGX is the symbol. And then what does it do? The very next week, it has a whopper of a decline. and it goes down to 5.15. I mean, really, is that fair, really, huh? 5.15. So then what happens is my rule of thumb with the rectangle formation, and I'm not trading this because I remember seeing it a long time ago, but I didn't have any notation on it. So it goes to, my rule of thumb is that if it starts to make higher highs and higher lows in a V-shaped pattern, even if it's a lopsided V, there's a chance that it could go to a peak D, just under, right on, or just above the previous high. And then if it takes out the midpoint of the rectangle, be careful. And that's exactly what it did. It went to peak A, peak B. It went to a peak C and almost made a little mini double top of a peak C1, C2 at the 13.01 area. Failed, took out the midpoint, which was around about 9:45. And here it is at 9:32. It's come all the way back down. So it did this V-shaped pattern to the high. Then it did the arch formation to the low, and I would have taken this here as the low, not that one. It's a little too far. I always start off kind of conservatively. And so I would have gone here. I would have gone to the high that was made if it was peak C or D, and I would have gone click, and I would have said, is it possible for it to make an arch formation like this going back? And the time sequence would have been to about the week of the 24th of May, and the level I was looking at, oops, it was this level right here. The level that I was looking at was, there it is, this low right here, the week of the 20th of October of 632. Now what you can see is it's gone in the arch formation. Is it trying to make a cup formation? Right here, instead of the V, it's now like a cup formation. Well, it's trying to. Isn't that interesting? So I just thought I'd do a little analysis on this since I hadn't looked at it before. That's kind of intriguing. And now let me show you what I would do. I would go from this side here, from this trough. Well, let me just do it one step at a time. I would then say if this is going to rally further, I would like to do it on the daily chart, the analysis. And just show you, it doesn't matter what it is. It's just, this is the price movement, right? And then I'd look for a doji candle or a big ugly candle, and I'd take the high of this particular candle here. And I'd say, okay, I'm going to take this, and then I'm going to try to find a particular candle or a particular low or a high that says, maybe we can get an exact left side, right side price time match. So what we've got here is, this is the candle that I would like to use right here. So that means it's this week that it has to rally. In fact, it's almost today. So this is, to me, a little too aggressive, right? You never know. It's a biotech, right? Anything could happen. I probably got Dan, and the Dan has already done his full analysis on this particular biotech. He loves biotechs. No, look at this. We're already past. No, we're right on due today. Today's the day. I don't think it's going to get there. This is the candle with the low of, on the 13th of March with a low of 9.18 and a high of 10.10. Today's high is, oh, look at that. Today's high is 9.41. Interesting, huh? Well, I'll just keep it in. And what I would say is this would be my Chapman Wave inside wedge target repellent line. All right, let's just do that. Do that. And I say, hey, okay, it's a work in progress. But I just thought I'd do a little analysis just based on that technique that I look at, which is called the large rectangle, which could become a lopsided V or a gravy cup that takes it back to the previous high to a D, just under, right on, or just above the previous high. So with that said, I'm just going to keep this in, and I better make a note because it could disappear off my list today, and then I won't even know what I was talking about. 9:34, and I'm going to say at 10:25 a.m. on 6/17/24. Oh, okay, good. All right. So, and it's just fascinating to me how many of these biotechs have been doing this. Microbiotechs, I should say. All right. So with that said, a couple of things I wanted to do is I wanted to go through. I wanted to show you something interesting. Look, here's NVIDIA. Do you see anything that's negative? Well, in this particular instance, instead of the on-balance volume holding steady, it just keeps spiking up and then you get this very minor pullback, and once again you got a spike up, a little minor pullback, and you've got 94% in the stochastic. So this is using up that time sequence that I talk about that says, it's about 6 weeks, maybe 8 weeks, and then at some point the stochastic is the one that gives you the clue because it starts to pull back under 20%, and that says be careful. But look how technically good all these things are. Look at Avagio. This is Broadcom. Look at this. Goes to extends leg C. If I'm correct, if this is C, remember I said I don't know any other way that I can count this. This is a huge gaps to the upside. Everything about what we're looking at here is suggesting that Broadcom should have a digestive phase. It's got nothing to do with the longer term outlooks, and nothing to do with the fundamentals, nothing to do with anything other than the on-balance volume completely overbought. It's really good that the stochastics are 92% and flat. MACD has had a big spike to the upside. It just says that visually, if nothing else, but also technically, there should be at least a bit of a pullback. And yet, look at this. It's up 65. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Hi, folks. So I just want to show you, here's a pattern. We were talking about the rectangle, but here's a rectangle, except it's called a channel. There's a down-sloping rectangle, right? The 200-period moving average of the E-mini is at 54.31, and it's trading at 54.32 right now. It just keeps coming back, and then it comes under it, over it, under it. That's kind of the magnet line for now. So let's just get back to our story. So it's very hard for me to, in my mind, I've just got the whole thing, the sequence of what I'm looking at, just trying to articulate it. And what I'm looking at is, let me just go back to this. It's hard for me to believe that the Dow could just keep going down, 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 and the tech sector can keep going up, 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 up. I can see it for a while, but just to continue that, unless at a certain point the tech sector barely gives anything away and then starts a brand new move to the upside. That is a huge ask. That is, it can happen, but wow. Then we're going to go into that coda phase that I talk about so often over the years, which is really, this would be too soon. I don't know if it would start right now. And the coda phase is really where you start to see all, in fact, the Olympic Games, it's very much like a coda phase. It's where everything just climaxes at the very highest achievement possibilities, and then it just fizzles out afterwards because, people need a rest. So I'm not sure that that's the case just yet, but I cannot rule it out. But for the MDY, which is the mid caps, having pulled back in the sideways digester phase using time, with the IWB, which is the Russell 1000, almost at all-time highs. Look, here's a brand new, so this went to a G right here. And everything this week looks like, we're ready for one sudden pop to the upside to get those missing Ds. Look, here's an A, Chapman wave A, B, and now you expect in a buy mode, which is a Zen, should hit a D, and then maybe we'll see what else happens, and it's an E in the weekly chart. Nothing here is negative. Look, the 9-period moving average, great, daily, weekly, monthly. So all I can say is that the digestive phase has been in certain areas. Now look at this. I showed my subscribers over the weekend when I did my hour-long video, looking back and looking forward for the overview. Look, we've got the XRT. This is the S&P Spider Retail that does have Amazon, which I think Amazon, I might be incorrect, but I think when I last read this, it was 20%. No, wrong. This is the wrong one. So the other one is the one, RTH. Sorry, this is the one. I had to redo it. So I was showing some charts at the very, very last minute of my webinar the other day on Friday afternoon after the market closed. And I must have hit something. And all of a sudden, the weekly chart saw all the notations that I've ever put into the chart, all vertically. I mean, they just conglomerated as if it was one day or 1 week. And all the letters, they were all squashed. And I thought, oh, God, I've had this before. It's really not a good thing. It's some kind of a bad distortion of data. So what I did is, thank goodness, I was able to rectify this purely by accident recently. And I closed down, I shut down, and I came back, refreshed. I went back to the previous data, and everything came back normal. So when you're looking at this now, everything's normal again. It was actually Tesla. You remember we were looking at Tesla, TSLA. That was all squashed this week. I thought, oh my God. Anyway, so what we're looking at, Tesla up 5. I told you it's stuck in a range. It's not breaking down. And to break out, it really has to start holding above 187. It went to just over 190, then pulled back. Today it's at 103. Now let's go back. So RTH, that is the Van Eck retail ETF, is the one that has Amazon 20%. Oh, what I was saying is that I had to redo. I had just done these. Not that I don't do them I've been doing them ever since they became ever since they became on the market. I've been notating them, but every once in a while I lose data. So look, here's Amazon. And this is a peak C in the daily chart. It made a peak B at 213.07 all-time high, the week of the 28th of March, pulls back. So this could still continue higher to a C and a D. But look at Amazon. Keep looking at the middle chart. And you can see Amazon also has had a high, and then it's just kind of gone sideways. A peak C in the monthly chart. Monthly's not over. It could still go, if it can go to 191.71, or even 70, the all-time high, the most recent high, then it'll continue leg C. Otherwise, it makes a peak C. All-time high was 188.65. So I'm putting this together by saying, Basil, what is Coda? Coda is where you wrap up all the ideas. The overture is where in music is where you set up your ideas, and then in the piece itself, you extrapolate, you take those ideas, and each one can get its own variation or its own melodic content that gets expanded on. And it's like opera, opera has the overture, and then you get all those different themes throughout the opera itself. And then you get the coda, and the coda kind of wraps everything up. So you've got the introduction, and then you've got the coda, and the coda has a different force to it. It has a wrapping up force. It just takes everything and wraps it up, and that's that. So that's what I always talk about when I'm saying coda. And coda is where I'm taking skyscrapers. Remember Oklahoma City? He's going to build the United States tallest building. We've got the fun fairs. You've got all these different vehicles that people use. I mean, rockets and all sorts of things to go to the highest level or the fastest speed. All of that. What happens is when you get the technology that's able to put everything together, like Otis was the perfect final ingredient that was needed to be able to build the Empire State Building as the tallest building in the world. And that was the same thing with Petronas Towers, and then with the Dubai. All these major, almost a mile high. Can you believe it? Just to be able to push the water, to turn your faucet on, to have the toilet work. It's just amazing. Anyway, so that becomes coda, all right? But you see it in the different areas of the market, and that's where exuberance becomes the bubble. And I don't see any bubble. I see, even here, I see great exuberance in the semiconductors, but until they split and they start trading in the hundreds and then go back to 400 or 500, that'll become the bubble. I'll be back in a moment. Basil, Chapman, Tiger Ignitions Hour. Dow is now only down 65.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that. as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. I had a question about Microsoft. I was about to say Mozart. Microsoft. And 442.44, down just 8 cents. Now, because it squeaked to a new all-time high in the daily chart, let me just do a little Chapman wave notation right here. The 388.03 low that was made on the 25th of April started a new move to the upside. It went peak A and pulled back very sharply, but it didn't take out 388.03, and it held it at 389. And then what happened is it went further high up again. It went B, C, D, and then it was a Chapman instant restart that has to be notated whether you use it or not. Then it went to E and F. That could have been F/B, but then it had a sharp pullback from 43.60 on the 23rd of May down to 404.51. Well, when it started the move up again and broke out above 43.60, I said, you know what, I'm going to call this an alternate count just for the moment. An alternate count possibly continuing G, because that pullback to 404 didn't take out the 388 starting point on the 25th of April. So let's call it a continuation. But if it goes 1 penny above 44.48, well, I think it was 8, that starts a leg B. There's no other way I can count it. There's never an H. Well, this turns out to make Microsoft quite bullish. I mean, I don't quite understand everything in the sense that I'm very impatient. Well, no, I shouldn't say I'm impatient. I'm becoming impatient, waiting for some kind of a digestive phase in the tech sector. And here it is. Microsoft begins a brand new buy signal to buy mode. It means it should still go to a C and a D, and that can take it all week. It could even be more than a week, but it could be, let's just say tomorrow is a lower high, that becomes a peak B. Let's imagine that on Tuesday it goes to a higher, no, Wednesday goes to a higher high, that'll be C. Thursday it pulls back, that becomes a peak C, and then Friday starts a leg D. So you can't get a peak D until next week, all right? It's a 7-way form. Wow. I mean, yeah, I am anticipating some kind of a pullback, and Microsoft, that's in the Dow, in the S&P, in the QQQ, in the XLK, in the AIQ. Well, it should be in the AIQ because it's part of the artificial intelligence area. I don't know. And it's leg E in the weekly chart, and that's this Chapman wave stalk day formation. I don't want to get into it right now. But all I can say is that one of the reasons why I say to subscribers, we're not going to go short Microsoft, at least not in this phase right now. Maybe when I really get a sign that we've got the beak, this is the Chapman wave stalk leg formation, leg, body, oval body, always has to be oval. The neck doesn't tell you how high, but it's the neck. If it goes over a certain level, then it become a one-to-one propeller shaft to the upside, but we haven't got that in place right now. And then after the neck comes the beak, which is part of the head, right? The beak and the head, that starts the way down. We haven't even got that. We're still in the neck, so it's still bullish. And this, look at this. The MACD is very close this way. We're just an hour and a quarter into the beginning of the week. So as far as I can see, I don't want to talk about the MACD as being positive yet. We have to wait until Friday. But why? If it crosses positive, there could be another boost. So that's why I'm saying I've got to consider two scenarios. One is that the Dow is telling us that the IWM, Russell 2000, and the steel stocks and many other sectors are telling me that they will have their comeuppance, the tech sector, they will come down at some point. And it might be there that the others start to stabilize, and we just have a nice digestive breather in the tech sector. We haven't got that yet, right? So all I can say is that you've got to think of this as, it isn't just a bifurcated market. It really is a tri or quadruple. It's just, it's the tech sector. All the derivatives of the tech sector seem to be participating to the upside, or at least there are enough stocks within each sector. So I'm trying my best not to get in the way there. Sometimes that's hard. It's hard. But in the meantime, Microsoft is this right at this particular point says, well, all the technicals are looking good. I did that with Amazon. Look at Apple. Apple made a new all-time high 4 days ago. Gone sideways, but it's still holding well. It's up 3.36 today, 250. Look at this, the 9-period moving average. How fantastic this is. Don't get in the way of it, I would say, because Apple is still holding really well. The MACD is good. Stochastic now is the clue that says maybe you're starting to see a little bit of slippage at 81%, but it hasn't gone under 80. And look at the spike in a leg B. There's no other way I can count this, but a leg B in the weekly chart and a leg C in the monthly. So this says Apple, I should change that price because that price is no more. It's now 220.20. 220.20. I'll type that in. I might have to change it within a day. 220.20. How about that, huh? Not bad for Apple. So all I'm saying to you is I'm now hesitant. We have raised cash, and that just means we can have a good chunk of money to put to work when we start to get buy signals, especially in these areas that have been faltering. The big question is, do they participate on the next area? Question came in, where's the next buy signal or the buy area that I would be looking at in advanced micro devices? Oh, I need to do something first. Yeah, let me move over to that chart. Now I can go AMD. You know, AMD is lagging. I'm kind of cautious about AMD. I think, and that's what I was saying, that there are just certain stocks within each sector that are really carrying the day. Advanced micro devices at 154 looks to me like it wants to first test this low that was made on the May the 14th at 148.78, and 149.03 is the 200-period moving average. So I'm just going to say to you that by Thursday of this week, Thursday to Friday, if at any point in the next 2 days the 152 level is taken out, that would be my target. And that's going to be really important for the weekly chart, because then you've got the pattern that we talk about all the time. And it's a pattern that says you come straight down, you try to rally, you fail at a peak A or a B, and then what do you get? You get this pattern right here. Okay, move up, go, 1, 2, 3, thank you. You get this particular pattern. So that, not that pattern, but this pattern right here, called the dreaded H. There it is. I'm just going to go there to show it to you. So this is a pattern that here, there, peak A and it failed, peak A and it failed, peak A and it failed. So this is the same pattern. It's a dreaded H where you take out you come straight down, take out the left side low, and then you go even lower. And that's what we're looking at here. Now, let me just explain something that it's a bit of a mystery to me. why the weekly chart went to a peak C at an all-time high and has pulled back this sharply. And the reason why I say it's a bit of a mystery is that usually you get to a D and then you get your major decline. So this is a little bit of an aberration. It was a peak D in the weekly chart, in the monthly chart, but the daily, the 22nd of March. This is a weekly chart, and it had a 227.30 all-time high, and now look at it, it's down at 150. Well, that's a big pullback. So this is the dreaded H that we might be looking at. I'd hold off.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento on Friday, June 14th and Friday, June 28th this month for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryJune24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So this is the first time in a little while that we've actually seen that the S&P is a little bit weaker than the Dow. Dow's trying to come back. Dow's not good. It's down 50, but it's trying to come back. And the other thing is that I just wanted to finish that off by saying the XRT, which is the S&P Select Spider Fund, retail, is right on a serious trend line. In the daily and the weekly, they're different trend lines altogether, in length, that is, right? So I'm watching, because if the retail starts to slide under, it's at 74.91 by Friday. If it's down below 74, that's going to be an issue. As long as it holds up here, that's not bad. And that's a really different chart to the RTH, which, of course, as I said, has the Van Eck retail ETF, which has Amazon. Okay, so at 20%. So let me just do this real quickly. You've got wheat, Wheat has been pulling back. It's got an extra down move. I said that this is the arch formation, almost like an Eiffel Tower, straight up, straight down. Soybean, same thing, going down to a fib support level. Corn, very, very, very different in the sense that it's held, but no, it's still making lower lows and lower highs. I wanted to show you, quickly before we run out of time. Oh, the VIX index. So the VIX index is just giving, the work I did over the weekend said there's just a hint that the VIX index is getting ready for a bit of a bounce. But that's a hint is nothing. What numbers are the most important thing. It's at 1296. At any time this week, if the volatility index, the VIX index, starts to trade at the 200-period moving average of 14.86 or higher, and the Dow actually goes down 250 points, and the S&P actually is a greater percentage down. In fact, it's down about 52 or more points. Finally, you might be getting some digestive phase. But those are the ifs that you have to look at, because right now, S&P is holding really well. Dow is coming back a little bit. Buying just keeps coming in. It's at that 9-period moving average in the weekly, in the daily chart. Those 914s are